This is our Forex blog for October 8th, 2013, and I'm going to show you the easiest way to trade using our tools. The first step is to identify which currencies to trade. And to do that, you want to be in the ones that are strong versus the weak, or if the weak currency is on the top, you want to sell that versus a strong currency. If it's on the bottom. You can see that the yen was strong coming up to today, and it broke down underneath its hourly moving average. Had a nice little pullback. That trend continued. And so when you see the yen that's weak, it's clearly, going down. You want to trade a strong currency versus it. So you can see the pounds also starting the day off going down, so that gets crossed off. And earlier in the day, you can see the euros going down until about 1 o'clock, and it kind of trends up for a little bit. Also, the dollar is trending up. So basically, you want to buy the dollar yen and you want to buy the euro yen starting the day off. So here's this chart of the euro yen, and basically we're looking to either buy sideways kind of rectangle pattern breakouts, or what I prefer, pullbacks. Now this isn't really much of a pullback, it's more of a flag pattern. This would be considered a pullback. So you have one trade here, and you might have been able to get into a few little tiny scalps, and then this trade right here with your risk is right here. And even if you got out when it returned to the high and missed the last 20 pips of it, the whole point is taking trades that the wins are bigger than the losses. Let's take a look at the dollar yen. Strong dollar, weak yen. This one's also very likely to go up. Focusing on buying it, preferably pullbacks, or if it breaks out and has a little flag pattern, those are pretty high probability because you're risking a super tiny amount. And even in this case, where it went up about 20 pips, the win is multiple times what the risk is. Let's take a look at some of the other pairs. You can see the Australian, very, very strong. Daily, weekly, monthly trends up. The CAD's kind of going sideways. The Swiss is down. The New Zealand also was going up, but nowhere near as strong as the Australian. And so probably the highest probability of all of the trades today would be to buy the Australian versus the weak yen. And you probably see much more explosive up moves than you did in the past or previous examples. Here you have a little flag pattern right here. You can see it shot up 20 pips. You have a nice little pullback right here. Small risk, not very much reward in that case. Small profit here. Kind of goes sideways for hours. And a lot of times when you get a little bit of a pullback outside of here, this is the biggest win of the day. Your risk is actually smaller than that. That's I'll draw it again on here. You buy when it breaks out over the trend line. And you probably would have made somewhere in between this amount. So you have 4 to 5 times bigger profit than what your risk is. And what's beautiful about these currency indexes is they're very predictable in terms of where the future price direction will be. For instance, the dollar trended down, then it went up, pulled back, went up, pulled back, wasn't able to even go to the previous high. And because it was weak earlier today, you have a little trend line break right here. At 7 o'clock tonight, very likely to go down. And so if you find a currency that's strong at that time, let's scroll all these back so we can kind of find that. Which currencies? The euro's kind of inching up, the yen's strong all of a sudden, the pound's okay. So basically we could be looking to buy the pound dollar, euro dollar, at 7 o'clock tonight. And as you can see, this one's kind of going sideways. It breaks out and goes up 10, 20, 30 pips. The euro dollar probably did something very similar. 7 o'clock, you're looking for a breakout. It broke out a little bit sooner than the other one did. You have a nice little wedge pattern here. And it went from around 75 all the way up to 36.05. So a 30 pip move while risking literally less than 10 pips. These breakouts like that, you want to put your stop underneath the low of the trend line of the pattern. And this one just exploded up. You're never going to catch every pip, but even if you get a part of that move, the win is 4 or 5 times bigger than the loss. Now, since it's late and I've been working all day, I like to get dinner and relax now. I'd like to show you our signals. Now these signals, for people that don't know what they're doing, there's probably close to 100 different patterns that we look for, and not all of them are going to be right, but if the euro is trending up on the currency index and the dollar is trending down, then the euro dollar is likely to go up, and you focus on the buy signals. And you can see all the buy signals worked. The dollar was, relatively strong until about 4, and then after 4 it became weak, and the euro changed direction. So you can see the buy signals worked. But even the counter trend trades also went at least 1 bar your way most of the time. This one went 2.5 bars your way. This one only went 1 bar your way. This one, you put your stop a few pips above the swing high. That one you wouldn't have been stopped out, and then it just continued down. Obviously these trades here are losers. In this one here, once it moves 1 bar your way, you move your stop that's a few pips underneath the low, pretty much near break even. And so the trades that don't take off, you have very, very tiny losses. And today was a pretty choppy day in the euro dollar. But the point is, for people that don't know what they're doing, you can have our FX trade signals let you know when to buy and sell. And if you're long and you're just kind of waiting for a breakout and you see a sell here, you might want to get out. If you get another long, and you don't have to take the buys when they happen. If you see it, the market's in a little choppy range like that, you might want to, and you obviously see more buy signals and sell signals, so that means the statistics are to the upside. You wait and you buy the breakout here, and typically the markets will make at least one or two waves up. So you have one wave up, pulled back, barely a higher high. You can really consider that if you use a longer time frame chart, it would be maybe 1 or 2 waves up, and you can see it went up about 25, 26 pips, or risking just 10. So that's the key to trading: small losses, big wins. And most days you'll see our signals catch a lot more, 20 to 50 pip moves. Today was just not one of those days.